Joe Terranova, I'm going to turn to you. You're calling this mixed picture we're seeing right now kind of an unfamiliar market. Why do you say so?
All right, here we are. I have a 10-year at 4.54. What should have happened coming into Monday? After the news that we got over the weekend, bond yields spiked. Bond yields are staying higher. This is the best that the bears can do. The market is basically pausing. It's basically consolidating. I'm not really sure what people are afraid of. I think what we are really trying to identify is that 2025 is a different market, and it's an unfamiliar market to investors over the last several years. I say that because if you study the 52-week highs, if you look at momentum, and by the way, momentum is a leading factor year to date. Generally, when momentum is a leading factor, markets don't go lower. Momentum being a leading factor is indicative of a confident, good market. But the momentum names are not the names that you think of. They're not the 2021 names with astronomical PEs and do-it-yourself type of names. They're not the names of 23 and 24 related to AI, software, and semis. They're industrials. They're financials. They're healthcares. You have, finally, dispersion in terms of performance. I was looking at my holdings this week in Joe T and personally. In Joe T, we have 16 names that are making 52-week highs this week. Frank, not one of those names is a technology name.
No Mag 7.
No Mag 7. All right, so you have Netflix.
You're keeping us in suspense. Here's some of the components right here. Axon, Monster, Train, Insulet, Republic Services. Give us a sense. Is there a common theme when we're talking about these names?
The common theme is that the last 2 years you had narrow, concentrated revenue growth. And it was all about AI. It was all about technology. So let's pick one of the names. Monday, Bank of New York makes a new 52-week high. Bank of New York is giving you double-digit revenue and earnings growth. Think about that. A regional bank, a super regional, giving you that type of growth. So the point on all of this is not a bad market. This is not a market to be afraid of. This is a market that is just rewarding investors in different places. How about utilities? Utilities are up 9% so far year to date when you have bond yields ticking higher. Look overseas. Germany making a new all-time high. Europe very strong. So the unfamiliar places of the last several years is what is leading the market higher. They're becoming the momentum names, and that's indicative of a confident environment.
All right, so I want to bounce a few things. You're saying it's not a bad market. You're saying it's a healthy market, just a bit of a change of leadership. Piper Sandler said something very similar. They called it a healthy pause. They said the upward momentum, your word, is slowing the S&P 500 is near 6,000, but a healthy pause seems more likely than a significant pullback. I want to kick this around to everybody else. Let's show Joe's stocks one more time. We're showing the statement here from Piper first, but some of these names, are you guys seeing any theme? One thing that kind of popped up in my mind is some protection from tariffs. You're talking Axon. They produce mostly in Arizona. Train Technologies had Dave Regnery on my show, Worldwide Exchange. They produce most of what they sell here in the U.S. Beverages are made here, obviously. Republic Services, they're picking up trash here in the U.S. Are you guys seeing anything else when it comes to these names?
Well, if you look at some of the names, again, that are hitting new highs, Schwab, for example, so financial services brokers, where I don't think they've come up with a tariff on brokerage services yet when you're trading on your phone. But,
Let's hope not.
Who knows?
Let's hope not.
But most of them are at all-time highs or close to it. Waste Connection, that's a name that we own all-time. Again, it's local. They're not putting a tariff on your local municipality's garbage, service. So you can go through a list and see that there is a theme. However, the market, remember, started the year at about this level. We're right where we were. We had a drop of 20% overall. I'm talking about the S&P 500. We've started the year at a certain level, 30 times for the Mag 7. Can we pull up the little chart? Annie, let's pull up that chart on multiples so far this year. You started the year with multiples on the Mag 7 formula at 30 times, went to 22.8 times. Now we're back to 27, almost 28 times, meaning that the overall market, and these are still a big component, despite what's going on underneath, is sort of rotating around. Started at a level, fell 20%, has come back. So you've got two tales of two markets. One where underneath there's a lot of names where you can make money on hitting all-time high, tariff-related, sustainable growth-related, and then you've got these big names, the mag names and some of the other huge components in the S&P that are sort of doing this, revolution, somersaulting over each other, now kind of back closer to where they were.
But that's a better market because you could generate alpha in that environment.
Yeah.
You don't have to worry about the Mag 7 outperforming, and now you got to chase beta.
Right. To your point, valuations obviously lower than they were to start the year. They dipped. The second one you showed was about 22. That was the April 8th lows. And so we had a lot of uncertainty. We've gotten, I guess, a bit more certainty now. The other thing, Carrie, you're doing my job. I'm supposed to call for the full screens. Andy, let's pull up Joe T's holdings when we're talking about some of these momentum names. Brent, we don't want to leave you out this conversation right now. What do you make of Joe T's list? These are components in the Joe T ETF hitting 52-week highs. Any of these names that you like right now that you see as a potential buy, or maybe some names you don't like?
Well, no, I think Joe makes a great point that you're having this broadening out across multiple sectors. If you look, Train and Monster have nothing to do with each other. And so I think that you do have this broadening out. At the same time, though, where are you getting the best margin and earnings growth? You're still getting them from the Mag 7. And so I think, this narrative that these companies are left for dead, the U.S. is not exceptional, I just think that was, garbage. And that you continue to see, I think, these big companies are really inexpensive. Not all of them, but most of them are very inexpensive relative to their growth rate and also, their margins. I think at the S&P level, though, to punch through around 6150, around the highs where we started the year, you're going to need a catalyst. And I think just because we have this unknown tariff overhang that isn't remotely resolved, by the way, not even remotely resolved, I think to punch through or go much higher seems not to be something that's going to happen, I think, until later this summer, until we get past that 90 days or get more clarity, coupled with, what's going to happen in Congress with the big, beautiful bill. And I think that's where yields come into play. And I think that the probability of the tax bill approving is very correlated with bond yields going higher. And so, Joe mentioned the 10-year, the market not really doing anything with that. I think we definitely need to continue that, because if the Fed doesn't cut rates, then we are going to have really big interest on the debt, which is going to eat more and more into GDP. And so I think there's reasons why we're at the higher end of the range for the S&P, and we're going to rest for a bit until we get more clarity on yields, taxes, and tariffs.
I don't disagree with any of that. Look, I think we're going to make a run at the all-time highs, and what happens from there, I think it's up in the air. I think it potentially could be a trap when you're just basically allocating to the market. But there's more than just the names that we're showing there in the last several days that have made 52-week highs. How about Uber making a 52-week high? TJX, Visa, MasterCard in the insurance industry, Travelers, Hartford. How about ADP? ADP making a 52-week high, Howmet making a 52-week high. So I think, again, if you're looking at the market, yeah, I agree with everything that Bryn is saying, and I agree with you in terms of valuation itself. There's challenges ahead, but that's not what you're supposed to be doing, just buying the index. You're supposed to be looking for alpha opportunities in individual names, and the momentum factor is telling you right now that there are a variety of different names, and they have reasonable valuations as well. It's not as if it's an astronomical PE.
Yeah, to your point, two things. Here at CNBC, we track momentum with the MTUM ETF.
Why do you do that?
About 20% over the last month. This guy, comedian. Also, bond yields obviously a big part of the story. So the tax bill you just mentioned, it has the potential to raise those bond yields. So we'll have to continue to watch that.